Well, ending the week on the highs or lows is a good thing if you're ending on the highs. Unfortunately, we're having a weak week, and it's getting weaker as we speak. What are the catalysts? What are we going to identify as a sell-off? Earnings, a bunch of earnings, pops and drops. We'll cover there. Ticker time at 8:35 with Tony Pollock. Folks, it's Friday again. Let's get going on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, folks, banging on the door is 6,700. We're down 31 handles, 67.17. The buck pulling back, but only down a nickel, 99.53. TLT flat, 89.70. Crude in the green. We've got some green here, folks. The USO up 51 cents, 71.39. GLD getting off the map, but not like the old days, up a buck 60, 367.20. SLV in the green by 38 cents, 43.93. And what do we have in Bitcoin here? We don't have 6 digits in the futures. We got only 5. Down $1,490 at 99,720. Let's bring in Triple D. And sometimes there's disciplined trading, and sometimes there's undisciplined trading. And if we were in the Bright office right now, I would say, Dennis, come into my office.
You didn't like my strategy?
We need to have a little
You didn't
talk.
like my strategy last night?
We need to talk.
You were offended by my strategy. Brent was involved. Bring Brent in here.
Brent was involved
let's
get the tire tracks out now.
Brent was involved too. He's hiding. He went into hiding. Brent, the chat, the STN room was involved. They all tried to say, oh, that would be fun. Let's try to do that. So the strategy evolved slow and steady, but we've been talking about this for a while, and it would have really worked really well if we would have did it all. But we talked about shorting every single stock into earnings last night. All of them. All the major companies. So we had a list. We had like IREN, XYZ, Affirm, Airbnb, DKNG, SNDK, Open Door. Yes, sorry, we talked about that one too. MP, Take Two, Archer. We had them all. We had a big long list. Expedia. And we were going to short everyone. I was like, you know what? We're going to short everyone. And we're probably going to lose on some of these for sure. You're not going to win on them all. But I think overall, I think the market sentiment's bad enough that I think the strategy would pay off. Anyways, we chickened out and we decided just to short up at the expected moves instead. So we were just going to randomly short all the stocks got up to the expected moves.
Kind of a happy
only got
compromise.
2 executions. They both won. But, I mean, it would have been actually a good strategy, Joel. I think. Like, just going through. Let's just do it for fun here. Let's just do it for fun. So you start with IREN. That stock's down. And we were saying we were going to short them and hold them to the open the next day. Like, give it time to, like, fizzle out. Like, IREN popped and dropped. Didn't get up to the expected move, though, because then we evolved it and we were just shorting the expected move. But XYZ would have been a huge winner right off the bat, down 15%. Airbnb, that would have lost. You'd be losing on that one. Affirm, that would have lost. You've been losing on that one. But, you know, so far, IREN down 3%. XYZ, if you did them all equally, down 15%. So now you're down 21. If you could just add them all up like this, we can do it like this to figure it out. Yeah. Airbnb is up 4, so now you're only up 17. You're up 16%. Okay. Affirm is up 6, so now you're only up 10. So then we go. But then it starts to get really SanDisk we had on there. That's another 3. So now you're only up 7. So it's not going so well. But then you get into like DKNG, which is down 6. Now you're up 13%. And I'm not saying like I'm just adding it up because it wouldn't be you wouldn't put all your money in all these things. So we're just trying to see if it worked overall. Peloton's going the other way if you did that.
Did you do MP?
TD. Yeah, you keep doing the math, Brent? Are you doing the math in the background?
MP down. What were we at?
Open Door is down 24%. That would have been a huge one. That would have been a huge one.
We're over 30% now.
Yeah, so you're winning. Like we're just adding up this, and I know it's not not making 30%. We can't do this way. We're just trying to see overall if we're coming out positive or negative. So don't ignore the percent part of it. We're just trying to figure out. Take 2, that would have been huge. Doximity, that would have been huge.
Oh, jeez. No, don't.
USAR, we had that one. That would have been huge, down 9%. MP Materials, that would have been down 7%.
Yeah,
Expedia would have kicked us in the butt. It's up 15.
We're
You'd have made some money,
like,
folks.
We're
You'd have made some
still
money. We can pretty much safely say, doing all the momos, that you would have made some money.
and
Yeah.
and at first it was like I was asking Dennis like just like pick a few here, and he was like, no, that's not going to work because
Because if you get the one bad one,
yeah,
you know, like one or
you
two
need
bad ones.
odds are if you do them all based on the environment we're in, this was the line of thinking. So the happy compromise was I think you put a few orders out before, but you mostly waited for those 2 that you hit on. You waited until they were up to the expected move, and then you hit them.
Yeah, that was the compromise. It sounded a little bit more sane. But you know what? I think the strategy holds water. So it would have made money, and some days it's not. And it's going to depend on the sentiment that you're in. So yesterday, sentiment was kind of in the gutter. We had a big down day. People were spooked. And our line of thinking was the ones that go down, like XYZ, we're probably going to continue to go down. But the ones that go up, the ones that gap up, are likely to maybe fade back. So you have some IRENs in there that would have initially been losers turned into winners. Even a firm, was way up. It was up to 75, now 71. So, I mean, the 2 ways to play it, shorting up the expected move. I think that worked. We got Expedia and we got SanDisk. Expedia actually went through the expected move, but we did it late. So it ended up making
it's
some
a good
money.
idea
And
to
then
do
it came back in. We got lucky. It came back down $20 after it went up. So, and then it came back up afterwards. But SanDisk was a winner right away, right around the expected move of 230 and never looked back. So, and SanDisk has given back almost all of it now. So those were the 2 we actually got executed on. They were both winners. But it's an interesting thought process. So, the overall strategy is just to figure out the sentiment. You could feel it yesterday. There was nervousness out there. So what we were thinking is any money manager that's getting pops is likely to sell into that strength to raise some cash. And if they go down, like XYZ just going down, not bouncing back. What have we learned, though? That sell the rip is working really well right now. That's what we're learning from this, is sell the rip. We eternally say buy the dip's the best strategy. Long-term, for sure, buy the dip's been the best strategy. But right now, in this market environment, sell the rip is really working well. Really working well.
How about,
so that's where we are. So we're not talking earnings or anything. We just got them all.
If you just shorted the ones with no earnings?
Just short the ones with no earnings too. Just short the ones. Yeah, the ones with no earnings. You're right. The ones that actually don't have any earnings, like Open MP. Yeah. So okay, well let's start with picking on a few of these here, and then we had the Tesla vote too. And the Tesla vote, just talking about sell the rep. That stock rips up to 460 last night on the approval. How high did we get? Oh, I think 460 I saw. Yeah, you can see it there.
Yeah, that's the Craig Levine level from the STN room. And by the way, I forgot to say, these charts are brought to you by TradeStation, our new sponsor for the month. And we are going to be learning so much about TradeStation this month. Everyone is going to be an expert, including Brent and Dennis and
Brent and Joel are actually going to go through official TradeStation training, so we can learn and make these charts better for you. So that's excited too. So we're excited to work with TradeStation on this. We're excited to bring you, more tools from TradeStation because they have so many other tools too. So we're excited to go that through too. But we thank them for obviously starting to sponsor a show here in November, sponsor going forward. So awesome. So Hive and TradeStation. We got 2 sponsors now. Kind of fun. Back to our regularly scheduled program. Tesla, 461. And again, sell the rips, working. And then it sells all the way out to 442, goes back up to 456, and then it sells off again. Sell the rip, working very well here right now, folks. That's where we're at. That can change in a hurry, but I think just the overall, get the feeling for the day, and then trade the after-hours session off of that feeling for the day. And yesterday, you could clearly see bears were in complete control. We closed near the lows on the S&P. We had a bloodbath and all those Momo names. And it's ugly when you're on your Twitter account, nobody's posting pictures of their account.
Ooh.
Because I've seen this relentlessly this year. It's people up thousands of percent. They're posting their millions of dollars that they've made, and some of it, like I read an article, some of this is fake. but some of it is probably really real too. Like there was definitely some people that made a lot of money this year. So, you know, if you were all in on some of these little like, you know, quantum names and nuclear names and you just went, you know, all in, I'm going to go margin out on all these names, you probably made a lot of money this year. So, but it's quiet in that front now. It's very quiet. We're not seeing a lot of pictures of people posting their new all-time highs here this morning. MP Materials, for one, and I'm long. I just bought some of this here, and it shows you know, buying the dip doesn't always work because I bought this dip 3 days ago, and I'm getting the beats on it here. But just looking, giving the evidence here. I don't care so much about the earnings right now. I just care about this overall theme because the theme is what matters. But MP Materials had $100 on October the 14th. Here we are, less than 4 weeks later, and the stock is 48. It did not do a 2-for-1 stock split. It literally is down over 50% in the last 3.5 weeks. Well, that's a move, folks. That's a move. We've talked about Oklo. You guys know Oklo. We went through this for a while here now. It looks like it's got a date under 100, just like Bitcoin, but 193 to 101. So not quite down 50%, but this Momo darling here is no longer a darling. So let's stop at Open Door. We'll actually cover those earnings here too. So Open Door got up to $10.87, is now under $5 here this morning, although I think there's some support at $5. But you can just see, you know, another Momo name, definitely a Momo name, August, September. It stalled out quite a while ago, but you can see the theme that I'm getting here is that there's a lot of names that you were seeing relentlessly on your Twitter feed that are really killed here now. So crowded trades coming uncrowded. That is what is happening here. And they didn't come uncrowded in one day. Some of these stocks were over the course of the last month or two coming uncrowded. Just the show death by 1,000 cuts. We lose MP, goes down a couple bucks every day, and all of a sudden it's down 50%. What the hell happened? That's how it goes. So Open Door, Brentster, can you cover these earnings for us and get into the details on the warrants as well?
Yep. Awesome. So Q3 adjusted earning 8-cent loss. Actually, not earnings, a loss per share, 8 cents. Misses versus a loss of 7 cents per share estimate. Sales did beat 915 million versus about 850 million. Guidance was, as far as I can tell, really strong, expecting Q4 sales just under 600 million. Analysts were down under 500 million. So that looks really strong. About 30 minutes later, 30 minutes after the earnings report comes out, company issues another press release saying they are announcing a shareholder first, that's a hyphenated word, shareholder first dividend of tradable warrants which align shareholders and management. So, you know, like in the case of MP, I don't really know that MP earnings and sales matter. We skip those. Open Door, I think they definitely matter a little bit more. That being said, last night at least, Dennis, you kind of had the sentiment. I asked you and you were like, maybe this warrants thing is weighing on the stock more, because right when I asked you, you were like, it's dilutive. This is dilutive.
It wasn't even a question. I mean, it was 650, and then they came out with this warrant stuff, and you were breaking the news over it. I was like, that's dilutive. I'm like, that's not good. And the stock started going down on it. You know, it was 640, 630, 620. People like that maybe don't understand how, you know, stock market works are like, oh my gosh, I'm getting warrants for free. This is fantastic. I'm getting something else. Those warrants eventually can get converted into common equity. So it's not like getting something for free. It is absolutely dilutive. And what diluted means is you now own less of the company that you just did, because you're going to ask you basically, you know, to pony up here to get more shares. So it's dilutive. All the way it's dilutive. So that's why stock's down 24% here today. Is the story over here? Never. Stories are never over. You don't know when they reignite. Maybe Eric Jackson, you know, comes back and gets, you know, the thing going again. So they're never over, but the story has cooled off and is pretty much ice cold right now. So, I mean, this is the way these things go. You know, stock goes from 50 cents to $10. Congratulations, Eric Jackson and his army. I mean, that's a huge gain. The thing was up 2,000%. That's incredible. Incredible. What did we learn? Like when your stocks go up 2,000% a couple of months, sometimes good to at least take your initial cost basis out and maybe even take a little bit more out. Is it coming back to 10? Not anytime soon. Is it going to eventually get back there? It's possible, but if I'm a betting man, I would probably say that $10 high is going to last for a very, very long time.
Just on the timing of this, and if y'all haven't been listening to our new segment on Wednesdays with CC Legator, he comes on our show on expirations and also comes in the STN room. Remember when he was pricing out the options on some of these stocks, and he was looking at the calls, and this is when it was trading 8, just after it pulled off 10, and the way the option markets were implying of when that thing would go to 10 or when that thing would go to 11 or when did the thing that would go to 12, it was pricing out like almost never. I mean, and what happens is that the people that are going for the big kill are like way overpaying for those out of the money options. And I wish I knew the phrases better, but and he just pointed that out to us. So he said, so if you want to play this from the long side, sure, but make sure you take care of some of that juice on the upside. And he's just been helping me, understand options a lot better. And that's going to continue in 2026 on the Stock Trading Network. We know you guys want options more, and we're going to get more options actions. And CC is great. So
CC
I
is
just
a
wanted
big
to
part of this
explain that.
network here now. So we love CC. He explains things so well. His visual is awesome. And that's why, we've launched a show with him. And right now it's just Wednesdays, but, we have the possibility to expand that as well. If you guys like it, join it, start watching it. We could continue to expand CC coverage as well because he does a great job. Give him likes. Give him likes on those shows. The likes drive the free content. So,
Okay.
back to our, again, regularly scheduled programming here of a lot of earnings stocks not doing that great today here. I mean, let's go back to the XYZ report because what the hell did they say? They're down 16% here right now. Oh, 15. It's a little bit up from where it was. This is a nightmare. And XYZ is a stock that, has been trying to grind its way back higher reluctantly, I will say.
Yes.
Not really participating that much in the overall bull market that we've had in the tech stocks this year. And you're now getting back to where the stock unfortunately traded back in April. So we're not far from the April highs. You're kind of in there. April, we can go and look at the calendar here. Yeah, we got down under 50 at the bottom, but I mean, we're getting back to where we were in May, June. You don't want to see when stocks start giving back their entire gains for the year. It's telling you there's something else wrong happening here. So let's dig into the fundamentals here, Benster. Give us the earnings.
All right. Company reported Q3 earnings, 54 cents. A miss versus 67-cent estimate. Sales also missed at 6.11 billion versus a 6.3 billion estimate. I just clicked into the 8K filing to see if there was any guidance. They gave a little 2025 gross profit guidance. They're expecting gross profit over $10 billion, adjusted net income around $2 billion. Just kind of was a lackluster report just from looking at the numbers, just from looking a little bit into the filing here. It's a lot of lackluster commentary and numbers.
Doesn't look great. I mean, we've always been have this XYZ PayPal battle going on, and it has been just going crazy. Like one takes the lead and then the other falters and comes off. And I mean, the selling the rip on these stocks has just worked really well for a long time. These stocks, both the stocks themselves, not saying the companies, but the stocks both suck. I mean, every time they rally 10%, PayPal had that ridiculous rally a week and a half ago where it was up over 10%. It's all gone a week later. I mean, there are stocks that are like kicking butt and taking names. PayPal and XYZ are not two of these stocks. These are two stocks that have been perennial underperformers. I mean, PayPal's all-time high, if we're going back to that, was $300 back in 2021 when people didn't care about valuation at all. And they don't, a lot of stocks care now. And then XYZ's all-time high was almost the same thing, up there at $289. So, I mean, basically these stocks have just been crushed and never coming back close to where they were 5 years ago. Are they coming back eventually? It's possible, but both of these stocks are also in an industry that is prime for disruption, the payments industry. I mean, there's competition coming from everywhere in this industry. So it's hard. Like, yeah, you can look at PayPal and say, man, there's a lot of value in here now. They used to pay 40 times earnings for PayPal here. And if you're going and looking at, and looking up the earnings now on a PE multiple, it seems like, man, there's got to be a lot of value. It's only trading at 11 times earnings. The problem is the disruption here. It has went from growth to like cash cow. You think that, remember that BCG matrix we took in business school, Joel? It was
the Boston Consulting Group.
You
The
got
cash
it.
cow.
Oh my
cash,
gosh,
boy, oh
Brentster is
boy.
good. I
The
never knew what
cash
that
cow.
stood for. The
I
Boston
better do up
Consulting
my
Group
shirt
matrix.
here. We're
Shout out
talking
to
about
BCG.
business school here. Woo!
Shout out
so
to BCG.
You got your
Shout
cash
out to the
cow, you got
Brentster.
your star, you got your growth star, you got your cash cow. What else is there? Do you remember what else, Triple
The
D?
dogs.
No, the dogs. Good call.
The
Yeah.
dog is in there, and yeah, the star is like in the perfect one where it's growth and everything going on. Let's just bring it up. Can we show this?
Yeah,
show this BCG
sure.
matrix.
Yeah.
Go
I
find it. It's
think
gotta
I
be the
was
best thing we
sick
can find.
that day.
It was one of the best things we learned in school, the
Cool.
BCG matrix. And they don't
I'm
stay
looking.
as stars
This is
forever.
I'm going to go get my fishing pole, folks. I'll be right
Yeah.
back.
So you have, he's going to show it here right now. We're teaching you stuff because you know what? Your stocks move around on this. They move around on this BCG matrix. And, this wasn't taught for the stock market. This was kind of taught for businesses themselves. But they follow this. So you have dogs. And Brentster's going to bring it up here and we'll go.
Yeah,
but you have the
here we
dogs that have low market shares, low market growth. They just aren't doing anything right. I would put some of these dogs that you have in there, these stocks are just going down, down, down. There you go. The BCG matrix. You have the question marks where they have a low market share, but they have high growth. So these are like stocks that are maybe materializing and eventually going to become stars or eventually going to become dogs.
This
you don't
is a
know
lottery,
which way
right?
they're going to go.
This is your lottery, right?
That's how they usually start, is a question mark. All businesses, STN Room, Stock Trade Network is a question mark right now. We don't know if we're going to get high growth or we don't know if we're going to epically fail because we don't know how to market ourselves and become a dog. We don't know where we're going to go. So all businesses kind of start as a question mark. And then they move. Joel's getting a kick out of this, but we're taking it back to business school. For those who didn't go to business school, it's a good lesson for you. Question mark. So most businesses start there. Then they eventually evolve into stars where they have high market shares and high market growth, where they got all kinds of growth. Think about Apple when it came out with the iPhone was a superstar. The growth was exceptional. It was just flying high. So it went from question mark, when, we can take it all the way back to like when this started, Apple, when they were having problems in the 90s, even you could say, when Microsoft gave them the handout, when the stock was down to $3. It was a big time question mark then. But then they became a star. The iPhone made Apple a star. Super high market share. Everybody's got one. I got one right here. And super high market growth. But what happens is stars all usually become cash cows. That is where Apple is now. It is now a cash cow because it has a high market share but very low growth. So it has now moved into this cash cow area. So what does all this mean? It means that there's certain stocks that fall into these different categories. The super high growth ones that are grabbing, market share, high market share, those can be around for a very long time. They're your Googles and your Microsoft, that eventually those were stars. And now they've become cash cows. The question marks are like, I'll be honest with you, Palantir is still a bit of a question mark. A little bit like you can say but it doesn't have a super high market share, but it has super high growth. So it's still the question mark. Is it going to become a star where it's going to make all this money, actually making dollars? Not the stock, but the company itself? That's a question. There's a lot of companies. MP Materials is a question mark still because it's got good growth. It looks like it's going up there. It looks like pretty solid. But again, not a super high market share here yet. So they can become that. They can also move down if the question mark can go straight to dogs, whereas companies just, didn't. And then you can have cash cows move to dogs too. So you don't want to be investing in the dogs. That's the bottom line. There's a lot of dog stocks out there barking. So we just gave you your lesson in the BCG matrix.
Nice work, Triple D.
Your kids and your wife and your husbands that you learned something today.
That was
BCG
good.
matrix.
And that was brought to you
Dick.
by, I would say,
Boston Consulting Group.
Wharton School of Business, but I'll say the Ross School of Business because that's the University of Michigan. That segment was brought to you by the Ross School of Business.
The Boston Consulting Group was from the University of Michigan?
No, you talked about learning something in business school.
Oh, okay. I was like, Boston Consulting Group. It's from the University.
I took one class of business school. I've told this story before.
What? And you took it pass fail.
I took it pass fail, and it was accounting. And the night before I was doing okay because I did the homework. I was doing okay, and the night before the test, there was this big party going on in East Lansing. And I'm like, hey, I don't know this stuff now. I'm not gonna know it. I'm just gonna go and wing it. Okay. And this is why I stayed up spring term, right? Was specifically to take this class. So I went to the party, I came back, I took the test, and then you know how they used to post the grades like up on the wall, right? You know, you
Yeah.
had to go to the business school.
Yeah. I had the same thing.
And I went and I got 19 out of 50 on the final.
Joel.
And she passed me.
Just gave you the pass. We just want to
Yeah.
get you
Because
out
of
of
that.
here. I don't want you in my class anymore. I don't want you in my class again. I'm just going to get rid of you. I just want you gone.
And I
That's why.
remember her name.
You were annoying the teacher enough that she just passed you because she didn't want it, like potentially have you as a student again. That's what it came down to. That's what it came down to.
Dennis, so
Bottom
a
line.
couple. What is a firm? What is IREN in the chart?
IREN would still be a question mark because like the market share is still unknown here. It's still trying to move to star. But you have, where you want to be invested is some question marks that are like trajecting. Like
Sure.
it's not bad to be invested in question marks. That's where you make a lot of money. So if we go back to that, you make a lot of money investing in question marks. A lot of money. The value investor of Warren Buffett doesn't touch any question marks. He sticks all with stars and cash cows. That's where Warren Buffett invests, is stars and cash cows. Question marks are all these. Oklos, they're all question marks because we don't know where they're going. Like Sweet Green, which just got downgraded to sell at Goldman Sachs 10 minutes ago here. This is a full-on dog now, but it went from question mark to dog. It never got to star. So, you had like the hopes and the dreams, and then it went from question mark, had the high growth, and then boom, it just never got there to make any money. So SG goes from question mark to dog. You want to get the question marks that are looking like they're going to stars.
Sweet teammate.
Simple
me.
SG. Sandy Golf.
Yeah. It's down $5. Goldman Sachs downgrades it to sell. You know what's so interesting? They downgrade this to sell right now. This literally just came out. To downgrade to sell. They put their price target $5. The stock is $5. What the hell are you trying to tell me? So I don't get it. Like you're downgrading to sell. Am I supposed to sell it at 508 and rebuy it at 5? Like what's happening here?
Can I ask two more, Dennis? Two more stocks. One from the chat, it was a firm, and one from me, Nebius.
Nebius has moved on that contract. Nebius moved more to star, in my opinion. They were a question mark, but they got the big Microsoft contract, and then it moved a little bit more to star. And stars can go down too. They don't always go up. Stocks go up and stocks go down. Don't confuse the business. This is evaluating the business, not the stock. This is not a stock market exercise. This is a business exercise. But if you believe the fundamentals have something to do with the stock market, and in many cases it has nothing to do with it. JC Peretz would say, stop looking at fundamentals, just look at your charts because fundamentals are completely disconnected. JC Peretz is right in a lot of cases. Some cases, though, when you start getting like the bears taking over, fundamentals start to matter. So it's important to know that, hey, I'm invested in this thing, but it's really still a question mark and it's really overvalued. So they could be like literally have a question mark company that is being priced as a star. Those are the sells.
Sure.
You don't want to be paying ridiculous amounts for companies that are still question marks. You can pay ridiculous amounts for companies, but they got to be actually showing me the bills, like show me the bills. And then you get to Apple, and you can still invest. Warren Buffett loves to invest in cash cows. He probably mostly invests in cash cows. He waits till it's going from star to cash cow.
Yeah.
Like that's where his sweet spot is. And you can make a lot of money over the years as a value investor, just investing and getting paid the bills. Your dividend stocks, your utility stocks, these are all cash cows. PepsiCo, your staples are cash cows. They can throw all in there. They just make money galore all the time. And then you have Bitcoin, which has no hope of ever making any money at all. So how do you evaluate that? Well, you can't on the BCG matrix. You know why? Because it's not a business. The BCG matrix is for evaluating businesses. So crypto doesn't really apply unless you get like some of these use cases there. I know there's different crypto coins, but Bitcoin is just a store of value. You can't really it's like throwing gold into a BCG matrix. You can't put gold into a BCG matrix. There's no business. Gold is not a business. Now, gold miner you could put in, but gold itself you can't. Digital gold like Bitcoin you can't. Doesn't apply to the BCG matrix. Hood is definitely a star. 100% it's a star. That's where you want to be. But again, you can overpay for stars, so you still have to keep in mind evaluations. That's where we are.
What about
A firm I would say is more like a star. Is it moving down to cash cow? What you will see, here's another lesson. When a firm is moving from star to cash cow, a lot of times the stock price goes down. Why is that? Because the growth is slowing. The growth is slowing. So they're making a lot of money, but the growth is slowing. So if the growth is slowing, like it's not growing exponentially high, then you start to see that premium get zapped out. We always talk about this, when a growth stock's going, but the growth starts to slow, the values guys are down here, the growth guys are down here. So you don't really want to be investing where you're going from stars to cash cows. So you got to watch on the transition over. You want to be investing when they're going from question marks to stars, not from stars to cash cows.
Robinhood?
Boring some people, but this is the way stock market works. It follows this BCG matrix to a certain extent.
Robinhood
is a star. It's a full-on star right now, but it's being priced so high. Is it an expensive star? Potentially, maybe.
Okay, I adjusted. For some stocks, this is going to work and things, but I'm going to have to get both on here. Here's the 200-day. So, I mean, we're losing the 50-day in a lot of things. So, I don't know if we'll see. We got to start. There's the 200, but we've been talking about the 50 for a long time. Well, like for Robinhood, we're right at the 50-day. Holy mackerel! We better hold that 120. We're actually below it right now. The 50-day has not been resistance in Robinhood ever. It seems like. Holy mackerel! There, wow. But that's a 50-day. Okay, 8:31. I see Tony in the background. Do we want to go to Tony? We want to cover some more earnings. What are we doing?
No, go to Tony. Tony, we don't like our guests waiting. Let's go to Tony.
Okay.
We gave you a business lesson this morning. We do everything.
Okay.
Pre-market prep.
Tony Pollock, owner of Real Life Trading. Did you study the BCG metrics in business school?
No, I did not.
Okay.
I was just a good old humble truck driver, so business school wasn't on my agenda there.
Okay, and I hate to do it to you, but happy birthday! It's Tony's birthday today.
Happy birthday, Tony!
How did that get out? Thank you.
Awesome.
You put it in a text to me, Tony. So
that's right.
How
We'd
does
sing
it feel
happy birthday to you, but YouTube would fine us for that. So we actually can't sing happy birthday to you. So we'll just say it. But if we sing happy birthday, yeah, we would actually get a fine from YouTube.
How does it feel to be 29?
I've never felt older at 29. So it's it's crazy. Oh man.
All right.
You guys are hilarious.
Take it over here, Joel.
I'm sorry?
I said take it over.
Okay. All right. Let's go.
Guys.
Let's go to the charts here, Tony.
Yeah,
what
let's
are
do
you
it.
seeing? What are you seeing? I know you were cautious, just like a couple weeks ago, and you were saying, this could happen. We really need to hold. We really need to hold this rally. This is really it was 2 weeks ago, and I can't remember what it was. We were having a crazy open, and I can't remember the exact price action or what the catalyst was, but walk us through this scenario. Walk us through your timeline and what you're looking at now. SPY. You can pull up your charts, whatever your preferred index is.
Yeah, let's do it. Let's take a look over here at the SPY, and I'll share my screen on this, and we'll get this thing rolling. So, let's see if I can't. There we go. Kept popping up some different things. So should be able to see the screen now. Yeah, there we go.
Yep.
So yeah, this we talked about last week. So we were screaming out of here. Super, super strong. So this rampage up, like we said, it's great, but what this does is get a whole bunch of people very, very excited and leveraging in. And so if the bulls don't step, we tend to get a lot of selling. And so that's what we were kind of talking about a little bit ago. And now that's exactly what's coming through. So the bulls really should have been here. Like this should have been an easy buy, easy buy. And we can see they didn't step in at all. yesterday on a daily. I mean, we've got a small little lower wick here. We're closing across the 20, which really should not be happening. Gapping down today, and now there's a really good chance, in my opinion, that SPY is going to 665 probably today. So this is a decent little day trade. It is extended. I would let this retest a little bit, but if it starts to fold over today, there's an opportunity there to get all the way down into the 664, 663 range on SPY, which, like I said, could be some pretty easy money coming through. So, yeah, it's not looking great. So now the big level that I'll be watching for next week, okay, everyone pay attention to this level, at least is what I'm looking for. I do believe we'll get a bounce, but 680 is going to be the line in the sand on SPY. So this is the level that I'm going to look at here. So I believe we're going to revisit 680 within the next week or so. If we get to 680 and this thing starts to rotate down, we are heading a lot lower. We'll be visiting 655. If 655 doesn't hold, we're going to like 600 area. It could get crazy. I doubt that happens, but just know this is our only line of defense here for the bulls. Really should have been here. We're already getting our early warning signs that bulls are not coming to play. And 680 should have been the buying area. So the big upper wicks coming through here, and then you look at the high wave candle on a weekly. If we end up closing super, super bearish like this, we've got ourselves an evening star reversal and come down to the 10 EMA. We're going to bounce back up. It would just be too good of a retest at that 680 mark for the last week's low. So watching for that. If we get above 680, I think we scream. We could easily put 700 back on the table here and potentially a little bit higher. So this is on a daily time frame. Yeah.
Time frame on is this a time frame on this chart we're looking at?
Yeah, daily time frame.
Daily time frame.
Yep.
So just to clarify, so like the first, if we do go back up there, like the first time, are you out there palms out at like 680? Are you get a little bit early at 679, 50? And then also, how do you define a failure?
Yeah. So what I'm going to do is I'm going to sit back for about an hour and watch this area when it gets there. So anywhere from like 678 to 682, this box, give yourself a cushion. I'll zoom in onto a smaller time frame, like an hourly, and then I want to see some type of upper wick starting to come through, some type of reversal. So you can kind of see here how it got stuck there previously. It's probably going to try to do something very similar to that again. So some more upper wicks. If this were to come back through, give it some time. I would not just short this here because we could just be kind of, screaming out of here. Because at the same time, if the bears don't defend here, the bulls are going to really start to scream back over. And the options are also showing that as well. So 680 is just loaded with call options. And so if we start getting up above that, we're going to start getting into some positive gamma territory, which is really going to feed the bulls. And so I don't want to just short here, but I do want to watch. And if I get that trigger and the bears are starting to show me that they are coming, in that area, then I want to short that. That's a place I want to be buying some puts for sure.
Okay, everyone loves ticker time with Tony. So let's go to Martin C on CoreWave. CRWV.
CRWV. Yeah, and yeah, we were just joking. I'm not 29.
You're not what?
I'm not 29.
Okay.
We had to just clarify. I'm getting some comments out there, but I'm a little bit. I'm not old, but I'm older than 29.
I would buy the 29 and sell the 39s.
There we go. That's a well-spoken pick right there. This stock CoreWeave. So I don't know much about this. For me, these, again, it's a very high-flying stock, which puts it on everyone's radar. And as soon as it goes on everyone's radar, it becomes very hard to trade. In my experience, because that's why most people are losing money, right? Is because it's on everyone's radar. They see this as wanting to go. So the fact that we are starting to take out some of these, this is on a weekly time frame. The fact that we're starting to take some of this out is not very good. So good chance now we're going back to 90, 85 area, and we'll see if the bulls will bounce it from there. If we start to take out 90 or 85, it's going to sink back lower. But what I would be looking at is this trend line coming through here. As
Yeah.
soon as it gets a close above that, maybe in a year or two, it probably is going to find some more bulls if that comes. I just don't think it's going to be tomorrow or next week. So this is pretty soft. Bulls really stepped in hard and then just rolled over. So the close back below the hammer that's kind of giving me all the information I need to know. Now I believe that bears are sitting here waiting. So any bounces should be met by more bear demand and pushed lower. I'm looking more bearish on this thing for the short term.
Okay, got a tough one for you. And not so tough for you the way you do it. Oracle.
ORCL.
Yep.
All right. This one, so I'm actually looking at doing a bull put spread on this one this week with my community. So I think that we have a very high chance of sideways to bullish on this one. I like it. Again, bulls should have been here, but we are getting really good buying structure on a daily. So even if we go a little bit lower, it should be finding some bulls here soon. Ideally, this would have held for the bulls. So good chance that we're going to come back up to 270. It's just like SPY. What we do at 270 is going to determine everything. If we bounce back up and then kind of roll over, it's done. If we hang out at least at 270 and start to break out, we should be working our way back up into 340. So that's what I'm looking at right now. Overall, I am leaning a lot more sideways to bullish on this over the next 2 to 3 weeks.
Yeah, nice gap fill there in Oracle. Boy, we're going to keep you here till about 11:30. Let's go with Microsoft.
All right. So Microsoft, this is very, very weak in my opinion on Microsoft. The bulls took off, loved earnings, everything came through strong, and then it was more of that like buy the rumor, sell the actual event, because now these bulls are giving everything up. Yesterday's close, look at the volume on yesterday's close. There's a reason for that. That was everyone waiting for that confirmation. Once this line gets taken out around 505, that is telling me at least the bulls did not do their job. So once we start getting below that, a lot of bulls are exiting. So now the bears are starting to lick their chops. And again, they're starting to put a lot of sell orders through here. So it's going to probably bounce here soon. I wouldn't be shocked if it takes out that low, traps some bears, and then bounces. Remember, everyone's usually late to the party, right? So you are going to have people that are going to chase and then lose. You're going to have people that get in too early without the confirmation and lose. And then you're going to have the rest of the people that understand price action. They're going to get in and give themselves the best risk reward, because the markets are not going to pay everybody out. So that, understanding that, your job now is just to join the team that is, I call the big money, the smart money. That's the players that are consistently going to make money. And so where are they sitting right now? They see this as new sentiment. And so any bounces, I would start looking for some shorts through here, because this break is telling me that the bulls aren't here. Is it guaranteed? No, it's all probabilities. But there's a really good chance that we have lower to go. If not, probably a rotation if the bulls do step back in. So looking at a weekly time frame, like this is a hefty double top, and we didn't build any support for like a year straight. So if this breaks, again, look for 490-ish to break down, and then the bulls to step back in, because that's where all the bears are going to come in. That's too obvious. It's going to bounce back up, and then everyone's going to buy the dip, and that's normally when it's going to fold back over when there's no more bears. It's probably coming back through. So keep an eye out for this. It doesn't have to do any of that. That's just in my brain. That's what I would be expecting.
Scenario.
And probably falling back down to like 455.
Okay, a couple more for you. We got a lower price stock here for you. And I believe Raphael's been asking about this for a while.
Yeah.
Let's see how you do with the lower price stock. Plug Power, PLUG.
PLUG. I remember looking at this a while back, way back in the day. All right. So I'm going to start out here on a weekly time frame and work my way down on this. We've got earnings coming up here soonish, right? That's going to change everything. So be aware of that. Everything I say right now could be thrown out the window on one bad earnings or one good earnings. But right here is where the bulls should be. So whenever you know where the bulls should be, now it's a really easy chance and opportunity for you to be able to figure out, did they do what they should have done? So we are at the bull area. Now it's time to see, are they going to do what they should do? This is a great breakout. Remember, your strength is not on the move. Your strength is in, do they follow through after the move? Like, this is what's going to tell me how strong the bulls are, not this big move up. And so everyone sees this big bull move up and they start to buy. I want to see this big bull move up is like, okay, the bulls are showing me their hand. Now here's my chance to see if they're actually going to follow through and we're going to get a real move out of this. This is a little baby move if the bulls step through, because I believe this could really run up to that $6 or $7 range, but they've got to step in here. So if we are not bouncing by about $2, I think something's up. So that would be my 2 cents on this. Again,
Okay.
these penny stocks are manipulated, so it's hard. You could have crazy news come through. People can manipulate the stock. It's cheap, so you can move the stock with orders. But this would be the spot where if the bulls are going to come and play, they're going to come here. If not, we're heading right back down to previous lows, most likely.
Which EMA is Tony using on the weekly?
Yeah, so on my chart, I've got the 10 EMA, the 20 EMA, the 50, the 100, and the 200. And I use those across every time frame. For me, EMAs are just support and resistances. I don't use them for entries. I don't care if they cross. All I care about is saying, hey, there's a really good chance that they're going to bounce right here, because this is also matching up with the level that I'm paying attention to. So most of my trading is actually done with pretty much nothing on the chart. This is how I do most of my trading. So
yeah, okay.
mostly price
Boy,
action.
we're getting a lot of questions here. Meta.
Let's do it.
Meta. Everyone wants meta.
Meta. Whew. So Meta here. I have an expected move on Meta on this head and shoulder pattern here. So left shoulder head, right shoulder broke through. Expected move takes us all the way down to 590. We're on our way. So there's a good chance that Meta is going to keep on sinking. We bounced off the 100 previously back here. This is blue line on this weekly chart, and that's probably where it's going to go to again. Again, I use my EMAs as support and resistances. So if it pays, if it respects it a lot, if it pays attention to it really clean, then I'll watch it again. So like for me, I'd be putting alerts kind of out here around like 586 range or so, and then watching to see if the bulls will step in. So I don't just buy blind. I want to go to a smaller time frame, watch it for a few hours, see if the sentiment is going to come through. But I believe Meta's coming into a buy area, so I wouldn't try to short this. Maybe you could do some day trades on it, but it's looking pretty bad, honestly. Like this level is pretty rough. Now we know where the bulls should be at. We have a little bit of a gap fill just below that. Really strong support here as well. So if the bulls step in, we should be seeing some buyers. If it cuts through all of this without any buyers, now we know something's up, and we're probably on our way to fill some gap fills down here around like 500 to 475.
Whoa,
So
whoa, Tony, we got to get you off that one. Okay.
Hey,
I got a good one for you. A little different scenario here.
Yeah.
Micron Technology.
Micron. What's the ticker on that one again?
MU.
MU. I'm drawing a blank.
That's
there
okay.
We go. So this one is just so strong. So strong. Eventually it will pull back, and when it does pull back, it will be one of the best buys of the year. If it does pull back. And just know this, it's not going to pull back as far as you want. Like I would love this at 160 to 150. The odds of it pulling back there are very low. It is very, very strong. In my opinion, again, I am not a buyer up here. Everyone is playing this game of bullish, and most people lose. And so I don't want to play the game with everyone else. I'll let this thing run another 100% without me. I don't care. I don't care about profits. I care about risk. What's my risk up here? Well, it's extremely extended, and I know at some point we're getting a pullback on this. How big of a pullback and when? That's really the question. But I know it's coming. And so I'm going to wait for some bulls to get trapped. I'm going to wait for the retail traders to go all in, which they probably already are. And then once that happens, they'll pull the rug out. They'll start to drop back down. And then I'll just watch for my buying cues down through here. And I'm watching price action to say, hey, where's my strength coming in at? Again, on smaller time frames. So I don't see anything here yet that's telling me this is getting ready for a drop. We take out 218, and I think some momentum starting to shift. But for right now, it's probably going to keep climbing higher. Again, I'm not participating in this. It's not my cup of tea. It's too risky for me, and I care more about risk than I do profits. I can make profits anywhere. Profits are easy to get. To everyone else, profits are hard to get. For me, it's like what you want to really focus on is risk, because I can make money anywhere. It's keeping that money. Anyone can make the money. Who can keep it? That's really what you want to be shifting your mindset to. So risk is the issue. Risk is the question. And right now, I don't have a high probability to manage my risk up here with it this extended, because I know at any point here, this thing's coming back down. I don't know how far or when, but I know the down move's coming, because that's how the markets always work. Go back to any time we've ever gone up, it comes back down, gone up, it comes back down. That's how the markets work. We go up, we come back down. This move is coming. It's just when. I'm just going to be ready for when this move comes instead of trying to worry about what it's going to do up here. So far, I still think it's probably got higher to go, at least until 218 breaks.
Okay. One more for you.
Okay.
And it's a boring one. Alcoa, AA, Alcoa.
All right. So this one is very sideways. The sideways stocks tend to be pretty tough to trade because there's not a clear momentum on this. So what I need to do actually is I need to start going into smaller time frames, and I need to find where it's making strong higher highs or higher lows. And so here on a daily time frame, this is my first warning flag for the bulls. We have always made strong higher highs and higher lows on this entire move. This is the first time that it's failing to do that, which is telling me that weakness is starting to come in for the bulls. So if I zoom in even on a smaller time frame, this 2-hour time frame is going to give me momentum over the next week or two, right? It's going to hold trend for a couple weeks on average on a 2-hour time frame. So I look here and I go, okay, we have broken the bull trend on this, and there's a good chance now that bull moves are going to be met by more bear demand on the short term. Long term, daily, we're still bullish. Dip should still get bought up, but we're starting to see the cracks on the daily. So then I zoom in on a smaller time frame and go, okay, this is my new line in the sand, $35. We start getting below that, we probably are going to see some more selling. I don't know how far. It'll go until the weakness starts to show up for all it's bullish. But a good way of doing it is just to play these channels. And so this is a great one to sell options on. It's not a very expensive stock, but selling iron condors on plays like this, basically meaning you're selling up above this, you win as long as it stays below this line, and you win as long as it stays above that line, and you just sell it way out there and let this thing keep chopping through. That's probably the easiest way to make money on this, because directionally, you've really got to be good at timing, managing risk, because there's not a clear direction on where this thing's trying to go to. It's just a good chance we're going to go to here, but when, and a pretty good chance you're going to go to here, but when. So riding that momentum is what's going to make the difference between profits and losses. For me, I'd rather not play the game and just sell the options, sit back and make some easy money and not try to stress about, is it going up or down on this?
Wow, what an incredible segment here with Tony Pollock, the birthday boy, owner of Real Life Trading. And just to give you guys a little bit of a tease here, we're cooking up something with Tony for December. We're gonna give you the details later on, but we know you enjoy his segments. So thank you, and have a great birthday, and enjoy those girls, Tony.
Thank you so much. Appreciate it. Thanks for having me on, guys.
Okay. All right. Here we are. We're trying to bounce. Trying to get over yesterday's low, and I'm just looking at the S&P, so I don't know how to trade in the relative year stocks, but if you want to bounce in these stocks, you want to bounce on what you're looking at. Look at yesterday's low. The close too is potential resistance, but let's talk Tesla.
Yeah, we didn't get into the details. We kind of summed it up with our whole theme about sell the rip and market that we're in here right now. But let's talk Tesla, because the pay package did get approved last night. The Brentster was covering this and watching live in the STN room. I continued after, and we continued to watch this until almost 6 o'clock last night. It was not interesting. That's the problem, is what I would say, is more than anything, is the pay package got approved. The stock popped 460 because, it's approved, means Musk's going to be there forever, basically. These targets are, really, lofty goals. Like, I think it's like $7 trillion market cap for Tesla for him to get that whole thing. So, I mean, it'd be really good for shareholders if he actually gets that. But I kept listening. I kept waiting for like the moment, and it just never came. He reiterated everything we already know. He kind of gave some wishy-washy timelines on next year. The Tesla semi is going to go into full production. Next year, Cybercab, and next year, Optimus towards the end of the year in full production. The robots were dancing up there and doing a little bit of stuff, but we didn't get anything new. He went very much into details on how, humanoids and how Optimus is being constructed, getting into the details of showing us the line and how it was all working.
Sweet.
It was just very much meat and potatoes, but no real meat meaning like we knew everything that he said. He didn't give us any new information. He didn't give us really any really awesome timelines besides saying he believes in the next couple of months that Teslas will be able to completely drive themselves. That should be able to, like, text and drive is what he said within the next couple of months. I'm taking the over on that. I don't think there's no way in the world you're going to be able, nowhere in the U.S. anyways, you're going to be able to text and drive in the Tesla. I don't think the government agencies are ready to regulate that, to say, yeah, texting and driving in a Tesla is legal. I don't think we're there. So I'm taking the over on that all day. So it was very much like not impressive, to be honest with you. I was expecting like, a little bit more of like, oh my goodness, look at that. It was no wow moment. So with that being said, that's why the stock has leaked away lots of the gains. We still have everything intact. It's still a lot of cool stuff they're working on there. It's just nothing new. So I think it's a little bit of a hangover after that, obviously event that we had yesterday here. And I think, the stock market not helping it either. So I do think eventually Tesla's going to hit 500. I've said that. I had my target on it, 500 by the end of the year. It's been just kind of hanging out here for the last month. So it's, the market's going to have to start turning around. But the good news is Tesla really isn't going down. If it starts going down with the overall market here, that's going to be a problem. So I'm still long Tesla, but definitely wasn't impressed with yesterday.
Craig Levine in the STN room, he's been focusing on this a lot. We've been looking at this 460 area that's been real pesky, and it's spiked above it a couple times. But I think right now, I see the 50-day down at 420 area. But to me, like, this 440 area is big. I know we're traded down 461. I know we're going to chop and slop around that area. But the bulls aren't, we did get to 435 yesterday, but like 440 seems to be a stand. The bulls are making a stand, trading lower today. Let's see if that level holds up in the long term.
We could do a couple other earnings stocks here. CEG reported this morning. This is going to be a tough report for Constellation Energy. We have seen some of these energy stocks really starting to get beat up. Yesterday we had LEU. We didn't get a chance to cover it on pre-market prep. We did talk about it in the STN room, though, but this is one that's really come off Centrus Energy. So this was a stock that really picked up in September, went from 200 to 450. It feels like in a heartbeat, especially for a stock that, doesn't historically have moves like that. And, now we've come full circle on LEU, going from 460 down to 260. So I think it sets up the bar a little bit tougher for some of these energy names. CEG tried to rally a little bit here ahead of it, but, really didn't hold and is now leaked away too. I don't know if you have the earnings here, Brentster. I'd be interested.
Yeah, they were mixed. They missed on the bottom line, 304 versus 312 estimate. They did beat very modestly on the sales, 6.57 versus 6.569 billion. They did narrow their earnings guidance from a prior range 890 to 960 down to 905 to 945. Analysts are around 850. So mixed quarter, some fine guidance out of CEG, I would say.
And that's all fine and dandy, but it's, a stock that has come, and if we just go longer term here and go at the longer term chart, it's a stock that's come a very long ways. 2023 is $100, 350. It's a cooling period for nuclear names, for energy names, for everything that's Momo. It's all cooling off right now, and RIPs are getting sold. That's the bottom line. We're in the sell the RIP camp on most of these, storied stocks of 2025. Does the market turn to them eventually and come back in? Yes, but right now, there's a lot of question marks in a lot of these stocks.
Very interesting here. You got it. Of all the setups we've seen, there's been a lot of curveballs. This is right at the expected move. Right here, right now. So the bulls they can make a stand here. We see the pre-market low of 328, a double bottom in 15, kind of hanging out at 330. The bulls can take control here with a strong bid at 330. Underneath 330, all bets are off here.
Let me jump in here, folks, before we wrap with a word from our wonderful sponsor, Hive Digital Technologies, a global leader in building and operating cutting-edge data centers from Bitcoin to high-performance computing. Hive is redefining the future by powering the world's most transformative technologies like AI with efficient, green, and clean energy. There is a QR code on the overlay on screen right now in the bottom right corner. You can scan that with your phone to learn more about Hive. You can also click into the description of this YouTube video to find a link and you can go click over there and learn a little bit more about Hive. Thanks again to Hive for sponsoring Pre-Market Prep.
I mean, crypto is still breaking down here. Ethereum may be one to look at more than Bitcoin here, Joel. I can look at ETHE if you want to just see like the ETF. Grayscale ETF was up at almost over $40 there back in August. Now we're down here at 26. So, the crypto bubble has come off here as well. So we're seeing bubbles burst everywhere, but not even bursting. They're just like leaking. So sometimes bubbles burst and they drop quickly. We've not seen that. We've just seen the air coming out of the bubbles.
Sure.
Like just squeeze that balloon in the air slowly.
Great analogy.
It's been so slow that it's almost been kind of unnoticeable. And then you just wake up and you're like, oh my gosh, Ethereum is down 40% from the highs, or 30 some percent from the highs. So I mean, Bitcoin, same thing. The air is just coming out of these things. And that was necessary. These were very crowded longs. It was too easy on the long side for all these stocks for a very long time. And, I think that's where this market corrects itself. We go into these corrective phases. Does that mean the story is over for Ethereum? Does that mean it's over for Bitcoin? No, it just means it's cooled off. So I think, again, Brian Shannon, we'll go to him once again. Buying the strength after the dip is probably the way to play this from the prudent trader type. So if you're coming here just trying to catch the falling knife, you've been hurt up pretty bad. But, if you try to find some strength after the dip, there may be an opportunity here. But let's wait for some periods of consolidation and start going up. And then it gives you an out at least. And then if it breaks down to a new low, at least you know where your out is. But when you're just catching the falling knife, and I tried to do it on MP Materials the other day, and I'm getting hit for it, which is deserved. I'm breaking my own rules. Stop trying to catch falling knives.
Okay, folks, we're going to wrap it up here on this Friday. I hope everyone did okay this week. It was kind of rough week in the markets. Back with you all Monday morning.